Hi everyone. The study class today, I was recording the lecture and I am now locked out of the room to be able to go back and upload it. So I'm just going to take a few minutes here and go over some of the highlights of the chapter prior to the test and allow you to see what you really want to pay attention to in this chapter. Now, this chapter is fairly easy because we're talking about for-profit, business structures in the government that are similar to for-profit entities. We know that the government does provide some services to the public at large and then to other departments within the government, and they do that because they believe it's going to be less expensive for them to operate in such a manner. And as a result of those activities, they create a proprietary fund. So proprietary funds are services or a type of business that the government enters into. Enterprise funds are those that provide services or goods to the public at large, and they charge the individuals that benefit from those services. Internal service funds are providing goods or services to another department or to other agencies within that exact same governmental unit, and they also charge a fee for that. The important thing to note here is the purpose in which they do that is to make due to the cost savings or to the ease of the service provided, it is a benefit for the other departments within that government. So as it relates to these proprietary funds, they are going to be treated different from the reporting of the fund financial statements. You know that with all the governmental funds we've previously discussed, they operate on a modified accrual basis. The transactions are recorded based on current resources. For these funds, the focus of accounting is on all resources. It's not the modified accrual basis, it's the full accrual basis. So we're going to take some time just to talk about some interesting aspects of these funds. And I'm just going to click through the chapter as I'm speaking here. Well, they do talk about at some length the not-for-profits, but I'm really going to focus most of this on the governments. Waste removal, electric and utility services, hospitals, think of Hennepin County, swimming pools, hockey rinks, golf courses. There's a lot of different activities and services that governments provide to the public. And others can provide that service also, but governments get involved because usually they believe it's cheaper than the private enterprise getting involved in that type of service. And so basically those areas are specific types of activities that where the government provides a service to the public would be reported in a fund, which would be considered an enterprise fund if it's for outside the government to the public, and if they provide or charge based on some type of fee arrangement. A full accrual basis where all resources, all debts, all capital assets are all put into the fund associated with this activity. So enterprise funds and internal service funds report all assets, all long-term debt as well as short-term debt, and of course short-term assets, but long-term assets, similar to for-profit accounting. Now, the reason we do that is the measurement focus really is in line with the GASB standards, that the financial reporting needs to provide information to make sure those revenues were enough to pay for the current services. And full accrual accounting really is the best method in order to make sure that those services, that the monies are being received, do take care of the expenses as a whole. We treat these business type activities just like we do the for-profit enterprise system. Now, as it relates to fund accounting, the fund accounting is going to report the full accrual basis. The government-wide statements, are done on a full accrual spectrum also. And so the conversion for enterprise funds is not going to be significant. We're going to talk at length the difference for the internal service funds and how that will be zeroed out. We'll talk about that as I get to it. As far as the financial statements that are required for these proprietary funds, it's important to note we're going to have a statement of net assets, which is similar to a balance sheet. We're going to have a statement of revenue, expenses, and changes in fund net assets, like an income statement, and something that is new that we don't have for the other funds, we're going to have a statement of cash flows. So both the internal service fund and the enterprise fund, both are going to require a statement of cash flows. The other interesting item in the statement of net assets, similar to a balance sheet, remember with for-profit enterprise we have equity, and equity can take the form of stock, partners, members, worth, retained earnings, a variety. But with the government, nobody owns the government. It's just a statement of net assets, an increase or decrease in net assets. And those net assets need to be split out into three areas. One is the invested in capital assets that are net of related debt. Important to know that. Then we've got one linked to restricted net assets, those assets that are set aside for a particular purpose that cannot be used. And then the unrestricted net assets. They need to be separated in the statement of net assets so it's very clear the components and the amounts that go into each one of those components. As you can see here on this statement, we have the net assets, the beginning of the period. We have the net assets at the end of the period. And in this case, we're showing differences of operating revenues versus non-operating revenues. That isn't something you need to be worried about for this chapter. As far as the statement of cash flows, what I do want you to be aware of is, as in for-profit accounting, there were three sections of a statement of cash flows: operating activities, financing activities, and investing activities. The one thing that is different with governmental accounting cash flows is there's two sections for financing activities. There's a cash flow from capital financing activities and from non-capital financing activities. So know that there is a difference in that while we still have those three sections, in the financing activities, we have it broken down into capital and non-capital financing activities. As we move on, unique issues as it relates to an enterprise fund. What I want to show you is that they are linked with financial accounting. They're run by GASB, but they adhere to the FASB pronouncements. And if GASB and FASB, which are pretty much right in line with one another, if there is a conflict, they will always adhere to the GASB standards because they're the Government Accounting Standards Board. Now, restricted assets and net assets. It's important to note in this chapter that there are monies that may be set aside for specific purposes. Those monies are going to be treated as restricted assets. And there are unique items as it relates to the enterprise fund where you may have customer deposits or even some monies on hand. Let's say there's a building process going on and the builder's required to have a certain sum of money as a retainer. Those monies are going to be restricted or set aside for a particular purpose in the statement of net assets. So just be familiar with that. Landfill cost, I really am not going to touch on significantly. If you look at the lecture, there's enough information as it relates to how those landfill costs that will occur after the landfill has been closed need to be accounted for in the current period. And so pay attention to that. When we deal with internal service funds, the key here is those internal service funds provide goods or services to other departments within the government, and they are treated as a separate fund for accounting purposes. And usually the way they derive their revenues to operate is by charging fees to other departments. Now, they're required to charge enough fees to handle all their costs. That's the ideal expectation. It doesn't always happen. But some ideas of internal service funds, as you can see here: supply store, parking garages, supply store within the government, printing services within the government. Self-insurance is a really big thing for governments, and they will have a whole department that just takes care of all of the employees in the government. Also, internal service funds are full accrual basis. They use all resources to account for their transactions. An important thing to note, because you're going to see it again on the test, is when a government establishes an internal service fund and it transfers money from the general fund, know that it's a transfer out and a transfer in. That money generally is not going to be paid back to that general fund. So usually the investment that establishes a fund, this was called non-reciprocal transfer from general fund. You could call it transfer out. That shows the money going into an internal service fund. And if we were recording the transaction from the general fund that showed the $600,000 being taken out of the general fund, we would have a debit to non-reciprocal transfer to internal service fund as the debit. The credit would be cash.